Hello all, we will get started in just a moment. We're waiting for people to finish joining us and then we'll begin. Hello all, can folks hear me? So I'm Lisa Donner and I'm the Executive Director of Americans for Financial Reform. And I want to welcome you to this afternoon's event, which is jointly sponsored by Americans for Financial Reform, the U.S. Public Interest Research Group, the Center for Responsible Lending, the Connecticut Fair Housing Center, Consumer Action, the Consumer Federation of America, the Leadership Conference on Civil and Human Rights, the National the National Consumer Law Center, the National Association of Consumer Advocates, New Jersey Citizen Action, the Student Borrower Protection Center, and the Woodstock Institute. We all want to thank you so much for joining us to celebrate the 10th anniversary of the Consumer Financial Protection Bureau, and want to add our deep appreciation for the many people gathered virtually who played such a crucial part in making the creation, survival, and effectiveness of the Bureau possible. We are really excited to take this moment to mark and to elevate the hard-fought establishment of the first ever federal regulator devoted to standing up for the public interest in the financial marketplace, and also its rededication to that mission under new leadership now. The CFPB has stood up by now Senator Elizabeth Warren, led by its first director, Richard Cordray, and urged action by many of us, made a difference in millions of people's lives. It cracked down on abusive practices, it's fought discrimination, it's gotten people's money back, and it's been willing to take on big bank titans in order to do all of that. And in so doing, it has changed the regulatory landscape for the better in ways that extend beyond consumer protection as well. Today, we want to lift up those accomplishments, but not rest on any laurels. There are urgent problems facing the country now, many of them both starkly revealed and exacerbated by the pandemic, including staggering levels of inequality and of economic precariousness for millions of people, and a racial wealth gap that is growing rather than shrinking. We want to talk about what the CFPB is, can, and should be doing now to grapple with them. So our program for this event is first a conversation with Senator Warren, and then a video presentation of remarks from CFPB Acting Director Dave Uejio, and then a panel of consumer protection leaders from different places around the country and with different areas of focus, including Illinois State Senator Jacqueline Collins, who led that state's recent successful huge fight to stop triple-digit interest rate payday lending. After the panel, we'll have a brief open mic for additional thoughts on priorities the CFPB should be taking on, and we'll close with remarks from House Financial Services Committee Chairwoman Maxine, who's been a tremendous leader on the creation and defense of the Bureau. Or I should say, that was our plan. We are having a little timing snafu, so we may instead begin with the video from Acting Director Uejio to get things started, and go from there. Let me make sure that we are able to tee that up and apologize for our snafu. And we will let you know what the order of operations is after that.
Hi. Should I go ahead and take it from here?
Yes, you should. That would be great.
Great, happy to. My name is Mike Litt. I'm the Consumer Campaign Director with the Public Interest Research Group. We're also known as PIRG. We're going to play a 6.5-minute video from the CFPB's Acting Director, Dave Uejio. We want to thank him for his remarks as well as his leadership over at the CFPB, which is focused on responding to COVID-19 and moving towards a more fair and just marketplace. And of course, I got to say, happy 10th birthday, CFPB. Thanks.
Thank you for inviting me to celebrate the Consumer Financial Protection Bureau's 10th anniversary. I want to first recognize Senator Warren and Representative Waters. Your combined vision and support gave rise to the CFPB and has allowed it to fulfill its mission for the past 10 years. Without you, the CFPB would not exist. I also want Americans for Financial Reform. The coalition coalition assembly advocated to create the CFPB 11 years ago. Without your steadfast initial and continuing advocacy, the CFPB may have continued to exist only in a proposed policy binder or been relegated to a case study in a law school textbook. I especially want to thank AFR's Executive Director, Lisa Donner. Your effort to assemble, lead, and manage this coalition of over 200 groups speaks to your unyielding commitment to racial and socioeconomic equity, financial stability, and the right of the American people to be heard both by their representatives in Congress and by the financial industry. The dedication of Senator Warren, Representative Waters, Executive Director Donner, and AFR consistently encourages the Bureau, as Richard Cordray put it, to fulfill both the spirit and the mandate of Congress through the Dodd-Frank Act. Today, I will talk about consumers' lived experience, the importance of enforcement, how we're helping consumers harmed by the pandemic, and our commitment to racial and economic equity. One of our most valuable assets is the voice of the consumer. At AFR, you know this well. You give a voice to consumers when you share people's views with local, state, and federal policymakers. At the CFPB, we give people a way to share their voice through consumer complaints. The complaint process empowers consumers by allowing them to highlight problems they are experiencing, share that experience with others, and receive a response. Since 2011, we have received more than 3 million complaints, and 99% of complaints we send to companies receive a timely response. Recently, we have been receiving more than 75,000 complaints every month, a testament to the scale of the financial hardships in our nation today. The consumer experience will always be an invaluable part of our work, and we will continue to ensure companies engage with consumers to address problems. Consumer rights are mere abstractions until they are enforced, and the CFPB supervision and enforcement efforts have had a tremendous impact on the marketplace, ensuring that companies live up to their obligations to consumers or face appropriate consequences. Since 2011, the CFPB's enforcement and supervision work has resulted in approximately $14.4 billion in consumer relief, and its enforcement actions have resulted in $1.7 billion in civil penalties. That work has helped millions of consumers and stopped many of the most egregious practices in the marketplace, but there is much more yet to be done. The CFPB was created in part to respond to the next economic crisis. But we did not expect the CFPB's first economic crisis would be created by a deadly pandemic and the economic devastation it carried in its wake. Though vaccines are now widely available and the economic recovery is proceeding, in the coming days and weeks, many local, state, and federal housing protections will end, and millions of Americans will face foreclosure and eviction. COVID-19 plunged a record number of Americans into housing insecurity, and we are focused on helping homeowners and renters during this difficult time. Our new amendments to the mortgage servicing rules will ensure that the millions of homeowners exiting forbearance later this year will have the time and support to make the decision that best fits their individual and family needs. Similarly, the CDC's eviction moratorium that we bolstered with an FDCPA rule is ending on July 31st, and millions of renters may soon seek new housing. Earlier this month, we issued a bulletin for landlords and tenant screening companies. We reminded them of their responsibility to only include accurate information in tenants' reports and to conduct proper investigations when consumers dispute information. We will closely monitor their compliance, and we will use all our tools, including enforcement, to protect consumers during this critical transition. Upon becoming the CFPB's acting director, I placed racial equity at the center of our actions. The pandemic and its economic and housing crises further exposed long-standing racial inequities across our society, and the CFPB is committed to promoting racial and economic equity in the consumer finance marketplace. We have elevated and expanded existing investigations and supervisory examinations and added new ones to ensure we have a healthy docket intended to address racial inequity. A core part of our work on racial and economic equity must be protecting consumers and communities of color from predatory financial practices, including predatory payday lending. We continue to believe that ability to repay is an important underwriting standard. To the extent small dollar lenders' business models rely on consumers' inability to repay, those practices cause harm that must be addressed by the CFPB. When we focus our attention to minority, vulnerable, and overlooked communities, we help everyone. As Maya Angelou said, no one of us can be free until everybody is free. We cannot have a truly competitive, innovative financial marketplace that responds to all consumers' needs until all consumers are able to enter the marketplace on equal footing with full knowledge and the ability to seek redress. I want to again thank Senator Warren and Representative Waters for their continued support, and AFR and its coalition for supporting the CFPB, its mission, and the American consumer. Happy birthday, CFPB. Thank you.
Thanks for introducing that, Mike. And I'm going to turn things over now to my colleague, Horacio, from the Woodstock Institute.
Good afternoon, everybody. Hopefully we're getting the technology working and everyone can see and hear me. My name is Horacio Mendez. I am the proud president and CEO of the Woodstock Institute, one of the oldest and more storied consumer and community financial research and advocacy organizations in the country. From our role in helping to create the original Community Reinvestment Act back in 1977, to the Predatory Loan Prevention Act this year and lots in between, we've never shied away from tough issues and always have the research ready for our partners to use in their work, be they advocates, bankers, regulators, community members, or, related to my role here today, politicians. Working with politicians can be a bit hit and miss, and it's probably a good idea both for Woodstock and my career to stop there. But let's put it this way, it is a very small list indeed of people that I would say the following of. The world needs more people like Jackie Collins, especially in positions of power and influence, including but not limited to state legislatures and in Congress. Senator Collins's work is centered on a vision of a better world, an equitable world, and a just economy. Other motivations like money, power, and connections are on the sidelines. She truly is a profile in courage. So Woodstock recently honored Senator Collins at our annual event last month for lifetime achievement in promoting economic justice. The Scheinfeld Award is named after the Woodstock Institute's founders in the mid-1970s and is presented rarely. Before this year, the last recipient of this award was then Illinois Attorney General Lisa Madigan, and that was 8 years ago. Senator Collins's record of achievement is impressive. During the housing crisis, she sponsored the Mortgage Rescue Fraud Act to protect homeowners from scam artists that were posing like their saviors. And also the Homeowner Protection Act, which put a pause on foreclosure proceedings for folks who were working with a housing counselor. This year, she was the champion of two ground-shaking legislative victories. The first is the Illinois Community Reinvestment Act, which makes Illinois only the second state in the country, behind Senator Warren's, to require state-chartered banks, credit unions, and non-bank lenders like mortgage companies to lend, invest, and serve low and moderate income communities. The second is the Predatory Loan Prevention Act, Illinois' new ironclad 36% rate cap. It's a testament to her tenacity that Illinois went from being the Wild West of payday lending in the early 2000s to having the strongest consumer protections in the country today. Now, I moved to Chicago from California last summer, so I'm pretty new to Illinois. But it didn't take very long for me to learn about Senator Collins. She's been a close partner of Woodstock's for years, and I quickly learned not to assume that her size equates with her stature. She has a calm fierceness that frustrates her opponents and scores big wins. As Illinois Senate President Don Harmon stated in his congratulatory remarks on her receiving the Scheinfeld Award, you don't want to be on the wrong side of Senator Collins and the people she represents. She comes to every battle exceptionally well prepared, and we're lucky to be one of her partners that helps her. If there was a history book on predatory loan reform in the United States, she'd be front and center. And thankfully for the people of Illinois, she's not done yet. With that, I'd like to introduce you all to a legislative superstar and the Illinois State Senate Assistant Majority Leader, Jackie Collins.
Thank you, Horatio, and thank you to the organizers of today's celebration for inviting me to speak. I thank you, Horatio, for all those kind and generous words. And I want to establish right away that I am a great admirer of Senator Elizabeth Warren. I look forward to her talk to us today. She is an economic justice warrior. Like many of you, I am grateful to Senator Warren for her leadership and vision, without which the CFPB might not have been born. It is appropriate that on your 10th birthday, we can also celebrate the birth of the Illinois Predatory Loan Prevention Act, also known as the PLPA, which sets a 36% rate cap on a wide swath of personal loan products. Payday loans, auto title loans, pawn loans, installment loans, and auto purchase loans are all covered. Across the country, folks are referring to the PLPA as the gold standard because it does not carve out any products. It has strong provisions to prevent out-of-state actors from evading the law, and it uses the Military Lending Act, all-in method, for calculating interest rates. We hope the PLPA will spur similar laws in other states and will motivate Congress to pass a 36% rate cap. I believe the history of the campaign to stop predatory lending in Illinois is instructive as to how we might achieve a national rate cap. For over 35 years, legalized loan sharking in Illinois has sapped billions of dollars from lower income and Black and brown communities. For many, an infusion of cash, whether it be through a stimulus check or a tax refund, leaves their pockets and goes directly into the pockets of the predatory lenders, most of whom are based out of state. Sister Kathy Brosner from LaGrange, Illinois, recounted in a letter to the editor of the Chicago Tribune earlier this year the origins of the campaign to stop predatory lending. In 1999, a poor woman came to confession at Holy Name Cathedral and spoke tearfully of her experience with payday loans. Monsignor John Egan assisted the woman in paying off both the loans and the interest, but his outrage towards the unscrupulous lenders had only begun. He immediately began calling friends, organizations, and associates to try to challenge this contemporary usury. From then to now, the coalition that Monsignor Egan began went through many changes. There were significant reforms to the industry adopted in 2005 and 2010. They caused the industry to evolve, but at the end of the day, consumers were still an easy target for predatory lenders. The Predatory Loan Prevention Act was part of a large package of bills that were part of the Illinois Black Caucus agenda. The Black Caucus agenda was first unveiled in September of last year. Several events fueled the creation of our agenda. First was the murder of George Floyd and other cases of police violence against Black people. Second was the Black Lives Matter movement and the rebellions that occurred in Chicago and across the nation. Third was COVID, which shined an even brighter light on racial, ethnic, and economic disparities. Early in the epidemic, More than half of the individuals dying from COVID-19 in Chicago were African Americans, despite composing only 29% of Chicago's population. And the fourth event was a report released last year by Chicago's NPR affiliate, WBEZ, that showed that mortgage lenders in Chicago have invested more in a single white neighborhood than in all of the Black neighborhoods combined. The Black Caucus agenda was comprised of pillars devoted to particular policy areas. The PLPA was part of the economic equity pillar. When the bill was debated around 5:30 a.m. on January 13, this year, following an all-nighter, I led the debate about the PLPA. As expected, a conservative senator who served for more than 20 years rose to trot out the industry's favorite but tired old talking point, namely that stopping predatory lending would limit access to credit. Because they have used the same argument year after year, I was ready. By that time, the PLPA had garnered the support of a wide swath of lenders, all of whom make loans under 36%. Most of them are members of the American FinTech Council, but there are also credit unions and the Capital Good Fund, a CDFI, which offers a variety of different products to consumers who have an average credit score of 580. When it was time for the vote in the Senate, the bill passed 35-9. Even the Senate Minority Leader and a few conservative Republicans voted yes. I will note, however, that many of the so-called moderate Democrats did not vote. In addition to Woodstock Institute, the many advocates who helped pass the PLPA include AARP, the Catholic Conference, Chicago Urban League, Central Illinois Organizing Project, Capital Good Fund, Heartland Alliance, Illinois PIRG, New America, and Citizen Action Illinois. Including both the House and Senate, 145 legislators voted yes on the PLPA. Only 9 voted no and 2 voted present. On the House side, State Representative Andrew Chesney, a Republican and proud Trump supporter, was an outstanding champion on this issue. He helped motivate his colleagues to act in a bipartisan way on an issue that has bipartisan support among Illinoisans in other states as well. Governor J.B. Pritzker signed the PLPA on March 23rd, and the law took effect immediately. At the bill signing, I noted that the PLPA will save consumers hundreds of millions of dollars in predatory loan fees, and that these savings will create jobs in our communities. According to a report by Woodstock, released in March, the savings generated by the PLPA will create 5,600 to nearly 9,000 jobs. Thanks to the PLPA, over 1,000 consumers in Illinois per day are saving over 1.3 million per day. I believe an effort to curb predatory lending should be a racial justice imperative. I have come to learn that some of my legislative peers in other states and in Congress, including Black Caucus members, adopt the narrative that Black communities need payday and other forms of predatory lending. Senator Warren has aptly noted that payday lenders are throwing bricks to a drowning man. To be more specific, they are throwing bricks to communities of color that can barely keep their heads above the water. Our communities need tools to build wealth. Predatory lenders do precisely the opposite. A predatory loan is like a drug that masks the symptoms of a disease temporarily, but does nothing to treat the underlying conditions. In fact, it makes the underlying conditions worse. Because of predatory lending, economic development in our communities has been trying to sail with a hole in the boat. What's worse, There are sharks in the water, loan sharks. Some of them pretend to be mermaids, but don't be fooled. Predatory lenders want our communities to be stuck in debt, and they don't want to build wealth. If our communities had more wealth, we wouldn't need the predatory lenders. Let me repeat that predatory lenders' goal for Black and Brown communities is precisely the opposite of the interests of those communities. It is not through the kindness of lenders' hearts that you are more than 25 times as likely to have a payday loan if you live in the lower income, predominantly Black Chicago neighborhood of Austin, than if you live in the higher income, predominantly white Chicago suburb of Barrington. Stop predatory lending, unfortunately, is not the silver bullet that will cure all of the ills in our communities. That is why the CFPB is so important. So long as there is money to be made, there will always be players scheming to get it. Some of them call themselves lenders, but others call themselves debt collectors or loan servicers. We also need federal regulators to help ensure that state consumer protections are not undermined by unscrupulous actors from other states or by lenders aligning themselves with banks or tribes to try and shield themselves from state rate caps. Less than a month after the PLPA took effect, we received evidence of a so-called tribal loan made to an Illinois consumer at 700% APR. In closing, let me leave you with this. Given the amount of money at stake, the predatory lenders won't give up. Beware of wolves in sheep's clothing, citing unintended consequences. Let me assure you, assisting or casting a wide net to stop predatory lending was very much an intended consequence. The Illinois legislature reconvenes for several days in October. Our opponents will be seeking loopholes and carve-outs, but so will we. My motto is one word: vigilance, vigilance, vigilance. Working with advocates and armed with the facts, I intend to stand firm and fight hard to protect the PLPA and in turn, the millions of consumers the law was designed to protect. Thank you. It's been an honor, and I look forward to Senator Warren. I know she's waiting. I'm awaiting as well. Thank you so much.
Thank you so much, Senator Collins, for those words and for your work and leadership in Illinois. It's my honor and pleasure once again to introduce Senator Warren, who, when she was Professor Warren, developed the idea for a consumer bureau and figured out how, along with allies, to make it a reality, who shaped the bureau during its creation, thinking about how to build the public interest commitment and accountability into its DNA, and who has in such a fundamental way inspired and enabled its willingness to fight the good fight, just as she has led and inspired and enabled a growing urgency and a willingness to take on Wall Street greed and excesses more broadly than that. So enormous gratitude, Senator Warren, for all of that and for taking the time to talk today.
Thank you, Lisa. It's good to be here with you and with all of our allies who've been in this fight. And I want to say thank you to all you've done. It's just amazing.
It is great to get to celebrate this 10-year, this birthday. So speaking of that, can you talk a little bit about what you learned through the process of getting the CFPB enacted into law and how some of that informs your role now as a legislator?
Yeah, you don't get what you don't fight for. It's easy to think now that the CFPB was inevitable, but that was not the case 10 years ago. Back when Dodd-Frank was being drafted and I proposed the CFPB, all the pundits, all the experts, most of the legislators just wrote it off. You know, the financial industry had all the money, all the resources on their side, and they were quite open in being quoted about, well, we're going to, there'll be some changes with this law. They weren't calling it Dodd-Frank yet. But the one thing that for sure will definitely never happen is the idea of this consumer agency. But we had people on our side. And we got organized, advocates, including unions and consumer groups and AARP, lots of folks whose first mission was not consumer protection jumped into the fight. The door was open just a little because of the crash, and with lots of people coming in, and then with the help of President Obama and then Vice President Biden, we got it over the finish line without a single vote to spare. If we'd lost one more person, it never would have happened. So I think of it as it was a real David versus Goliath moment. The banks were spending, some estimates are they were spending more than $1 million a day lobbying Congress. But in the end, American families won. So when we take this, you kind of do the fast forward to today, I keep those same principles in mind. I think about where the majority of the American people want this fight to go, even if they haven't quite identified it in that way. They want childcare and student debt cancellation and a fairer tax system. So I look at this as, when we fight for a government that works for everyone, we can succeed and we can make a real difference in the lives of Americans. And that's why I'm here in this office.
Thanks. So there's a lot, I think, to feel good about what the Bureau has done in the first 10 years of its life. But when you look back, what do you think are some of the greatest accomplishments of that time?
Well, I think the crown jewel of the agency is the Consumer Complaint Hotline. It is such a powerful tool. And I looked recently, I think there have been more than 2.3 million complaints that have been filed since we took the hotline live 9 years ago. Remember, it was a year in. And I think back as we were building it, how much, when I walked through the offices at the OTS, they had moldering boxes of complaints that people had filed. Nobody ever paid any attention to them. I had, as the person who was setting up the agency, I had different people call on me, both from other agencies and from outside government, basically to say, we'll set up outsource your consumer complaint hotline because they're a real pain in the behind to run, and we'll run it for you and never bother you with it. And it was clear that the mindset behind it was a kind of a, yeah, people need a way to blah, 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 but don't worry, we'll make sure they never bother you. And I thought that was just the wrong way to understand the consumer complaint hotline. There is such an incredible wealth of information that comes from them. They can truly be the heat map of where things are going wrong in America. If we'd had a really good consumer complaint hotline and paid attention to the data, think what we would have known in 2004 and 2005 and 2006 about what was happening with those mortgages. And you can take all that public. So now the CFPB can use those data to monitor what's going wrong. It can use it to monitor different institutions and take enforcement actions against them. And I think this is, I actually think the reason I think the thing is so good, I think it's still underutilized in the sense that I think that more people in the public are learning about it, both as consumers to be able to file complaints, but also, for example, for the press to use it more. And if the media used it more just to understand, that's how you make this big diffuse consumer market potentially function better. Your bank cheats you out of $10. Let's face it, Lisa, without the CFPB, there's really pretty much nothing to do about it, right? Nobody can bring a lawsuit. You can complain to your neighbor, but the odds are good your neighbor isn't even using the same bank. There's no way for everybody to get together, but by golly, you use something like the CFPB and more consumers use it and more of the media pay attention to it. Now you say this bank has a real problem and here's the device they're using to cheat people, so that you get not just official enforcement actions, but you actually get the market starting to work in the right direction. And besides that, Lisa, one more thing about why it's so terrific. People come up to me and tell me about it. I mean, I can't tell you how much I love it. I have had people come up to me just when I'm out and say, you know, I never really believed that complaining to a government agency would make any difference. But I was so dang mad about X that happened to me with my credit card company that there it was 11 o'clock at night and I was still chewing on it, couldn't do it. And I thought, I'm just going to file a complaint. Went to CFPB, it was easy as pie. And within 2 days, I heard back, I got a letter of apology from the credit card company, I got a full refund of my money, and I got a waiver of fees for a year, or whatever it was. It really is taking a playing field that is so badly tilted toward the giants and just beginning to let it work just on a little bit more level ground. And that's something we built together, and that's pretty terrific.
It happens to me a lot less than to you, but I too have had the experience of having sort of an official conversation with people about the Bureau, and then they'll say, by the way, right, I filed this complaint and here's what happened. And
here's what happened. That's exactly right. I had someone more than once, I had someone introduce me when I was at a political event and say, and there's one more reason I'm here with Senator Warren, and that's because I collected $117 from whoever it was that cheated me out of it. And, you know, it's both about the level playing field with the creditors, but it's also about restoring just a little faith in government, that you and I get out there and fight. A lot of people are on this call, fight to make government work on the side of the people. But how do you make that tangible? This is one of the ways to do it.
Thanks. So thinking about that and other important jobs of the Bureau, how do you think about the CFPB's role in combating discrimination in the financial services?
Oh, you know, this really gets to the heart of the mission of the Bureau. We can't expect to effectively regulate abusive consumer financial products if we don't understand who is being abused and how. I think that one of the principal reasons we needed a CFPB is to make financial market products work, not just for some people, but for all Americans. And that includes making sure that borrowers of color aren't being discriminated against, and that we're treating systemic racism like the crisis that it is. So I think that racial justice needs to be at the forefront of everything the agency does, from data collection to enforcement actions against companies that discriminate, to rulemaking that helps prevent discrimination in the first place. For way too long, regulators just look the other way when companies discriminated against consumers. And that was true in housing and auto lending and credit cards and just a whole slew of other products. Those days are over. And CFPB is on the front lines of helping ensure that real change is moving across this country.
Thanks, Senator Warren. Turning to a more challenging moment, during the Trump administration, as we all saw, there was a very rapid and dramatic change in the direction of the agency away from its original mission. What do you think are some of the lessons that we should learn from that experience and that moment in the Bureau's history?
They tried hard to break it and they failed. So no, it's not a great period for the agency, obviously. Mick Mulvaney and Kathy Kraninger did everything they could to try to gut the CFPB. And there's no doubt that during the years that they were in charge, that the agency did not live up to its potential. And we'll pay, American consumers will pay a price for that for years to come. And it's important actually to situate it. It's not just what Mulvaney and Kraninger tried to do. They were just part of a broader effort to bring down the CFPB. You know, legislation to eliminate the CFPB has been introduced in the House and the Senate in every single Congress since the agency was created in 2011. And this has happened despite the fact that the agency has now an established track record of nonpartisan protection of consumers, and despite the agency's popularity. So here's what I take away from that. Even in the face of all this opposition from politicians and from industry, the agency survived and stayed strong, in part because it is built right, and in part because thousands of dedicated career employees showed up to work every day, even under leadership they didn't believe in at the agency. They showed up and they kept doing their jobs to do their best to help consumers. I think that's just powerfully important, and it's a word about public service that's easy to overlook. CFPB is a mission-driven agency. It was from the very beginning, and that sense of mission is there. Even when Mick Mulvaney and Kathy Kraninger and Republicans in the House and Senate try to attack it, they know why they're there, and they're there to get it done. And let's not forget, in the midst of all this, just last year, the United States Supreme Court said what we knew all along, and that is that the CFPB is constitutional and that the agency is here to stay. So I'm feeling pretty good about all that.
Yeah, I think maybe one thing I would add too, and going back to talking about the inspiration you have provided at the beginning, that the CFPB's initial orientation towards making a difference in people's lives and being willing to take on hard fights if that was necessary in order to do that meant that then there was something to fight for and keep working on, rather than being afraid of being criticized if they were too tough or stood up to powerful interests, knowing that that was actually the best way to build something that mattered and that people would be willing to continue to fight for.
You know, Lisa, I think you're exactly right. And I just want to underscore what you're saying. This agency was always going to, shall we say, aggravate rich and powerful interests. They fought it from the first day, and they have a lot of friends in Congress. So it was always going to be a battle. And the agency really could have gone either of two ways. It could have said, you know what, let's not raise any trouble. Let's just kind of keep our heads down and we'll tink, where we can, we'll make changes in the law. But we're going to keep this all low key. Or it could say, here is a problem. It is a big problem, and we're going to wade straight into it. And we're going to do everything we can to fix it. And sometimes, look, they've failed. They've had problems. They've run into the fact that once Trump got elected, right, that certain regulations got overturned, didn't get them done in time. But the key is they fought the right fights. And that means that what was always going to be, in my view, the true protection of the agency, that is all the people around this country who get helped by it, who believe in it, the people who see it working. That's the real strength and protection of the agency. And that only happens if you're fighting for things that matter. So I think you're exactly right on that point, Lisa. Exactly.
All right, a last question for you. And you talked about this a little when we talked about its role in combating discrimination, but what are you hoping to see from the new leadership of the Bureau? And what do you think the most urgent problems that people are facing that they need to do something about are?
Well, first I should say, I think Acting Director Uejio has done a great job in getting the agency back on track. And I give him a lot of credit. And again, getting it back on track and making it move. You know, it's like riding a bicycle. You can't just sit still on a bicycle, it will fall over. So he's gotten there, he's reversed directions from the way that Kraninger was going, and he started really pumping this thing forward. I know that when Rohit Chopra is confirmed by the Senate, he's going to lead an agency that's stronger than ever. He has great vision for this agency. It's going to be terrific. So you asked me about the areas. There are so many areas still where the Bureau can make a difference. I think one of them is overdraft fees. You know, this is an area where there's a lot of predatory behavior by giant banks that make billions of dollars in profits and squeeze every last penny out of customers who are struggling. And I think getting some rules around that could help families a lot. I think it's going to be critical for the Bureau to be vigilant in protecting renters and borrowers who could be facing potential evictions and foreclosures in the coming months as we see the COVID protections come to an end. Auto lending is another area where the Trump administration completely fell down on the job, and we urgently need to pick up the slack. You know, auto lending is the third largest category of household debt behind mortgages and student loans. It's also one of the areas where we now see the most predatory tricks and traps, especially against consumers of color. I think the Bureau needs to take a look at cryptocurrency. We're seeing an essentially unregulated market grow by the day, and financial scams are growing with it. Crypto is an area that I think all of our financial regulators are going to need to work together to address, and that means the CFPB. CFPB needs a seat at the table in those discussions. On these issues, on issues like payday lending, fintech, student loan servicing, I know that the new leadership at the Bureau will use every tool in its toolkit to protect consumers and to hold bad actors accountable. I have a lot of confidence in the people who work at the CFPB and at the new leadership that will take this agency forward over the next several years. It's a good time.
Thank you, Senator Warren. That's a very nice note to end on. And we thank you enormously for the leadership here and for taking the time to talk with us today.
Well, thank you, Lisa. And again, I want to thank everybody who's on this call today. The agency wouldn't survive without all of the allies who invest so much of their time and their energy and their hearts in trying to root out abuses and level the playing field, just so that families across this country get a little fairness in their lives and an opportunity to build more secure futures. So thank you, Lisa, for all that you do, for all that AFR does. I really appreciate your leadership, and thank you to everybody who's on this call. We've done good work together, and we're going to do more in the future.
Hear, hear.
All right.
Thanks. I'm going to pass the baton to my colleague, Linda, who's going to moderate the panel coming up, and also remind everyone, because it's now been a while since we talked about the agenda, that after that panel at 4 o'clock and some discussion, we will be joined by House Financial Services Committee Chair Maxine Waters. So stick around for the panel and for Chair Waters' remarks after it.
Hi, everybody. Thank you so much for being here, and thank you to the panelists for being a little flexible today. It's really my honor to introduce you to the panel we have. So we have Senator Collins joining us for the rest of the panel. You heard from her earlier. And I will give a brief introduction to everybody else on the panel, but then turn it over to them to give them a chance to talk more about their work in their own words. But we're really excited. We have a panel of leaders all over the country and on all of myriad of issues that the Bureau has worked on, and Bureau alumni as well. And so we really look forward to hearing what they have to say about how the CFPB's existence has interacted with their work. And I will say, just as we celebrate the 10th birthday of the CFPB, as someone who was in direct services before AFR, I was, as we were preparing for this panel, I actually was talking to a fellow panelist about, I very much remember a pre and post CFPB consumer attorney life. And so I anticipate you may be hearing similar stories from the panel in this discussion today. So today, first up, we, Senator Collins Horacio did a great job introducing. So I'm just gonna say, welcome back, and we're thrilled to have you. We have Lorraine Martinez-Bellamy, who's a staff attorney at the Connecticut Fair Housing Center, where she works on foreclosure prevention issues. And she's also been a very active member of our AFR LEP task force that's been working on helping borrowers with limited English proficiency have better language access in their mortgage transactions. We have Colonel Paul Cantwill, who is currently the Distinguished Professor in Residence and Executive Director of the Rule of Law Program at Loyola University Chicago School of Law. This is a panel about the CFPB, so I have to also mention that he was formerly the head of the CFPB Office of Servicemember Affairs. And so we will hear lots about how the CFPB is work with and his work with making sure that our service members and veterans are protected. We have Marceline White, who's the Executive Director of the Maryland Consumer Rights Coalition. She leads the coalition's work in promoting economic justice and financial inclusion throughout Maryland. And she really has worked on, I think, every issue. I was reading through her bio, and I think I will let her tell you about which one she wants to focus on today, but almost everything the CFPB works on, she's also worked on throughout the many years. So we're excited to have her. And last but certainly not least is Kat Welbeck, who's the Director of Advocacy and Civil Rights Council at the Student Borrower Protection Center and also a CFPB alumni. So we will look forward to hearing from all of these folks. I'm gonna, I mean, it was funny, I was supposed to transition right off Senator Collins. Maybe I'll have Senator Collins go last and turn it over to everybody else on the panel to tell us a little bit more about yourself, about your work, and how what you've worked on over, how the past many years interacts with how the CFPB has come into being and what the CFPB works on. And Lorraine, why don't we start with you?
Hi, everyone. Thank you, Linda, so much for the introduction. My name is Lorraine Martinez-Bellamy, and I'm a staff attorney at the Connecticut Fair Housing Center. I do foreclosure defense work, and I also sue mortgage servicers a lot. So the CFPB mortgage servicing rules are kind of like my Bible and the law of the land for the work that I do. And like Linda mentioned, we're contemporaries in terms of when we started our careers. So I did have a couple of years of practice before the servicing rules came into effect on January 10th, 2014. That's how important they are to the work that I do, that I remember their effective date. And a lot of the work that we do to protect homeowners in foreclosure and those that are having issues with their servicers is directly tied to the mortgage servicing rules and the protections that the CFPB has created for borrowers, mortgage borrowers, who are many times facing hardship, have fallen behind, or anticipating that they are going to fall behind. And what the mortgage servicing rules did for us at that time was create a expectation and an industry standard of what would be tolerated and what would be considered a violation of federal law. So it gave us a way and something to point to say this is unfair, this is not how you're supposed to treat borrowers. And of course it came off of, it came from the foreclosure crisis, where so many homes were lost and so many families' wealth was consumed by pretty shoddy mortgage servicing, by mortgage servicers not having the setup and the systems and honestly the incentives to care to provide good service to borrowers. And when there was this huge influx of foreclosures, which we will unfortunately experience very soon, once the various moratoria end later this month, and folks are trying to catch back up, they did not have the mechanisms, the staffing, the systems to maintain the flood of hardship applications that were coming. So now through the mortgage servicing rules, once they were enacted, there's specific staffing requirements. There are specific notices that borrowers have to receive. And me specifically, I will look through the rules with a fine-tooth comb when I'm creating complaints and litigating issues on behalf of my clients, to find, to stack as many violations as I can, and provide them leverage in a system that is really not created and set up to give them any leverage at all as consumers. So life before the mortgage servicing rules came into effect and before the CFPB enacted them was kind of a hodgepodge of HAMP servicing rules, Fannie Mae servicing rules, FHA servicing rules. And now we have a set industry standard managed by one agency that just sets the bar much higher than it used to be for how consumers and borrowers can expect to be treated as they deal with their mortgage servicers. So it's very important to me in the work that I do, the litigation I do, and we're constantly as advocates gathering to make them better and to share our thoughts and how the rules are actually working on the ground with the CFPB, who throughout the years have been incredibly receptive to our feedback and has looked for our feedback as they tweak rules and close gaps, because as advocates, we're the ones that know what the rules actually look like in real life when you go to try to enforce them. So those are near and dear to my heart.
Thank you, Lorraine. Colonel Cantwill, you were there at the Bureau for some of these years. What about you?
I was, Linda. First of all, it's great to see everyone. Good afternoon, ladies and gentlemen. Happy birthday, Bureau. It is great, especially great to see my friend and colleague, Senator Collins here, fellow Loyola Law grad as well, and the great Illinois contingent. So good to see all of you, and congratulations on the great work that we've done so far. Through my active duty, my 25-year active duty military career, Linda, I saw firsthand how payday lending and other predatory products and services ruined individual lives and careers and compromised military readiness at the national level. But I was really, really fortunate to be one of the few who could do something about it. And indeed, the Bureau has been at my side and the side of others for a long, long time as we have engaged in this very erstwhile battle. In my ultimate assignment in uniform, and at the beginning of my career in civil service, I led the Department of Defense federal rulemaking, resulting in the 2015 rules implementing the Military Lending Act. We expanded the protections for service members and their families greatly. And we thus really created the nation's first true national usury law. The Bureau was an absolutely essential partner in that endeavor, and I and the Department of Defense are grateful and will remain grateful to the Bureau and to great folks like Rich Cordray and Chris Peterson, Seth Frotman, Ellie Bloom, all unfortunately now alumni of the Bureau, like myself, for their superb expertise and support. As you noted, I was more fortunate still even to lead the Office of Servicemember Affairs at the Bureau, becoming part of that truly remarkable idea and the agency. And if you can see it, I am proudly wearing my Spotlight CFPB pin today. I am very, very fortunate and privileged to remain active in the consumer protection area, working at both the national and state levels now to expand protections to veterans, members of our reserve components, and indeed all consumers. So I'll say now, and I'll look forward to questions and dialogue with the rest of the panel later. Happy birthday, Bureau, and let's get back to work.
Thank you so much. Marceline?
Sure. Good afternoon. It's great to be here with everyone. And I also want to wish the CFPB a happy birthday. I was actually fortunate enough about 10.5 years ago or so to be on the stage with then Professor Warren and the late great Congressman Cummings to talk to voters in Maryland about the need for a consumer financial protection agency. And, you know, lo and behold, 10 years later, we only have to look back and see all of the great and critical work that the CFPB has done. I can talk about, as you've mentioned, we work on the gamut of issues that the CFPB works on, but I want to mention two in particular that are important in Maryland for different reasons. The first is payday lending. And now Maryland has been part of what we like to refer to as payday Freelandia, meaning that we've had a 36% rate cap for more than 30 years in Maryland. So we shouldn't have payday lenders on the ground. However, every 5 to 6 years or so, payday lenders will look and try to create a new product that exploits a very particular loophole in our code, and then use that loophole to create payday loan products within our state. So in the time I've been at the Maryland Consumer Rights Coalition, we've had this constant battle of kind of whack-a-mole, where we close a loophole and then, you know, 4 years later, another product springs up that exploits a different loophole to offer high-cost, unaffordable, and unsustainable loans to low-income and working families throughout Maryland. Luckily, our General Assembly has been supportive of continuing to close those loopholes. But for us, it's particularly important for the work the CFPB has been doing on the payday rule, because we feel like a national standard is critical in this area as well as in so many other areas, so that we don't have to keep going back constantly and, you know, whacking down another finite product that has grown up kind of in the crevices of our code that payday lenders are exploiting. So that's been very critical. And another area for us has really been debt collection that I hadn't heard people talk about so much, but I know if you look at the complaint database that Senator Warren was speaking about, Maryland is one of the most complainingest states. So we have high record numbers of complaints, and debt collection is at the core of many of our complaints, both people being sued for debt they don't believe they owe, wrong amounts, you know, poor records in terms of owing the debt. And it's a real problem, not only getting rid of predatory products, but stopping debt collection, which the way it plays out in Maryland criminalizes poverty and deepens and widens the racial wealth gap. So again, I think for a lot of reasons, the work the CFPB has done around debt collection has been very important for us, particularly around new rules and enforcement.
Thank you so much. Kat, how about you?
Hi. I guess, Linda, again, I just want to start by thanking you and AFR for the opportunity to join today. And I'll also join in the chorus for wishing the Bureau a happy birthday. Again, I'm Kat Welbeck, Director of Advocacy and Civil Rights Council at the Student Borrower Protection Center. And by way of background, the SBPC, we're an organization that's solely focused on alleviating the burden of student debt, as is pretty obvious by our name. But we engage in a mix of advocacy, policymaking, and litigation strategy to rein in industry abuses and protect borrower rights. So there are obviously many, many ways that this intersects with the Bureau's agenda. And specifically with much of my work, I examine the student debt crisis through a lens of equity and economic justice. And so I'm really excited to talk about the Bureau's 10th anniversary, the way that our work intersects with the Bureau's authorities. And also prior to joining the SBPC, as Linda mentioned, I also worked in the Bureau's Office of Public Engagement. And so also it's just so amazing to have had the experience of working with so many amazing colleagues committed to the mission of protecting consumers and creating a fair marketplace. And so actually, to get to your question, Linda, there are just so many ways when we think about the fact that we have a $1.7 trillion student debt crisis that is affecting 45 million people all across this country. There's so many ways that we see the Bureau's authority intersecting. So whether it's, in student loan servicing, curbing predatory for-profit school abuses, looking into the use of education data and underwriting, or even really considering a range of risk and emerging products like those we see with income share agreements. I just think there's a lot to be said about how the Bureau has a critical role to play all across the student loan market and really protecting consumers. So I'm excited to dig into this a little bit more, into more detail throughout the panel.
Senator Collins, I know you had a chance to give your opening, but I wanted to make sure I give you a chance to add anything before we go into the questions, if you have anything.
No, I just joined my colleagues on the panel in agreement how appreciative I am of the work that you do, the CFPB. And for Colonel Kantwill, I could have never been successful in my legislation without his input and his experience in dealing with the issue. And I just welcome all of us. We're on the ground and we have to stay vigilant. And I'm so afraid that we have the 4 years, maybe 3 now, but we have to stay on the national level because we have to protect the CFPB.
I think that's actually a really good segue. I know I want to spend a lot of the panel talking about where we move forward from here, but I do think on its 10th birthday, maybe we should take just one question for the panel before we do that on what does it mean to have a federal regulator that's focused on consumer protection? Like, I mean, Senator Collins really laid it out. All of you have done work either with other federal agencies or different constituencies or on the ground at the state and local level. And, of course, there are state and local laws and regulations and statutes that aren't necessarily that existed before, but maybe have been strengthened over the years or weakened, depending on what period you're looking at. And so one question I wanted to throw out to the panel before we move forward is just what is it meant to have a federal national regulator focus on consumer protection, and how is that intersected with your state work or your local work or your work with other agencies in your subject area? And I didn't call on an order. So if anyone wants to jump in, if there's 2 people that jump in at the same time, I will do some mediating. But I'll give you a moment to think too. All right, we'll go to Colonel Kantwill.
Thanks, Linda. Yeah, it has been pivotal, critical to have a leader like the Bureau in this particular space, because it is a space that was vast and had not been filled by any sort of regulatory body or agency. And one of the things I think that the Bureau did very, very well, and that the founders of the Bureau, the legislators who drafted the legislation, did extremely well, is that they identified vulnerable communities, vulnerable consumers, they call them, and they mandated that there would be sections of the Bureau devoted to protecting those consumers in the financial marketplace. Older Americans, for example, is one, service members is another. And coming from the military community, of course, I have great reverence for our service members and veterans and their families. And this is an agency, and OSA is a subcomponent of the agency, which is absolutely dedicated to protecting those service members in the financial marketplace. And it's done a brilliant job for service members, veterans, and their families. One of the things that it's done, perhaps a byproduct of the fact that it has been able to focus on our service members in the military community, is that it's helped bring veterans together too. Folks don't realize that when our folks leave military service, they're no longer part of the Department of Defense, and there's really no national organization that brings veterans together and considers their issues together. And the Bureau has done a remarkable job of that, because service members, veterans, and their families have been concentrated on by OSA and by the Bureau writ large. So I think it's had an absolutely tremendous effect. It's filled that critical void, and I really look forward to seeing what the Bureau will do in the future. So thanks for the opportunity to address that.
I'll go next, Linda. I know for myself as an advocate, a direct service provider, I think having a place where consumers can lodge complaints, like Senator Warren was mentioning during her remarks, is so important, because so much of how we live life feels very bureaucratic when things happen and you're calling 800 numbers and you're just not getting the answers that you need. I think having the ability to either call in or just log right into a very simple complaint system at least makes consumers feel empowered in some way and like they're being heard. We've also, Linda and I over the years, advocated very strongly to maintain the public-facing nature of the complaint database. Of course, for self-serving reasons, as a litigator, it is a mine of beautiful information for me to support RESPA complaints and be able to prove pattern and practice issues when servicers are violating the CFPB mortgage servicing rules. But it's also a way for consumers to see that they are not alone, that there are other people complaining about the same thing. I get a lot of calls from consumers that will, look through other complaints and say there's, 100 other people complaining about the same thing. And during the best years, and even in the years that we were fighting for tooth and nail for everything to stay public, the complaint database provided much needed information to the Bureau about what was happening. And even if during certain years there wasn't much enforcement happening and there wasn't much that they could do, it's there, the information is there. And as we're in, renewed spirits with the new director, I know that there will be tons of information in there that they can go back to, that supervision and enforcement can take a look at. So having really a watchdog agency that has no conflicts of interest, as many of the other federal mortgage regulators, at least in my work, they have different things to consider. Their missions have a lot of different facets and things that have to be checked off. Whereas with the CFPB, it's just really about making sure consumers are treated well and are treated fairly in the market. So having that has been really useful as an advocate to be able to just go and be real and tell them exactly what's happening. And we've had such a great working relationship with the Bureau over the years of just being able to be very candid about what we're seeing and feel heard as advocates. And I think consumers feel the same way. They feel heard, from their homes where they're lodging these complaints. So I think it makes a huge difference.
I would just briefly add to that, if we think back before the CFPB, it's almost hard to imagine, but we've been living through such an increased complexity of financial products and services and increased financialization of everything, that it's very hard for an average consumer to make sense of it, to really understand the products, and particularly when it's so easy to insert deceptive or unclear clauses into contracts, and much harder for an average consumer to understand it. That, before that, if they were seeking relief, they were really on their own. They could go to a lawyer, they could go to their state agency, but having a national bureau that can really coordinate this and work at this on a broader scale is critical. And for us, the research and evidence has been critical too, because we'll often take what's coming out at the national level and then try to look and see what's happening in Maryland. If we're seeing this at a national scale, what's happening in our state and what's happening in different parts of our state, and what does that mean for us in terms of policy? So on both those levels, I think it's been critically important to have the agency, and we're glad that we get to celebrate it.
I know, Kat, you look like you were also going to say something.
Yes, and just really quickly, because I just know we can take so much time just talking about all the ways that the Bureau has just absolutely just been so critical to consumers. But I just really want to echo what Paul, Lorraine, and Marceline were saying, but really just talking about the Bureau's role in really giving consumers a voice and really having a space where there is a feedback loop, where consumers really felt as though like there's a space where, they have a federal regulator's ear, and that's actually being used to create policy to better serve communities. And so just really thinking what it means for consumers to feel as though they have a voice and a source of recourse. And so, yeah, and so I'll stop there. There's so much more to say, but also really just thinking how excited I am to think about how many accomplishments the Bureau's had in the past 10 years. And I think we've also seen, what it looks like when the agency was forced to, take somewhat of a step back in a hostile administration. So there's just so much excitement thinking about what does it really mean for, the Bureau to be thinking about, prioritizing consumers and really taking, as we see in these, in the early days of even Director Uejio's, as acting director, looking at the Bureau, talking about racial equity and really what is it going to mean for the Bureau to really use all the tools in its toolbox, as Senator Warren was saying earlier, to really protect the consumer. So I'm just really excited about what that outlook could look like in the coming years.
Senator Collins?
Just want to, I guess, encapsulate everything I've heard. I agree totally. I just see it as giving the consumer a seat at the table of power and policy.
Yeah, I really agree with what everyone has said. I think the CFPB, you have a way as a normal person. I've always said that consumer is just a fancy word for regular person, because I don't know a single person in this country, I mean, after, maybe older than a certain age, that doesn't have either a bank account, a loan of some kind, whether it's a student loan or a mortgage or some installment loan or a payday loan, as much as we hope that those are going away. We're continuing the fight, or a credit card or a savings account. All of those things are auto loan. Those are all things that most people have one of those. I think I actually go further. Most people have more than one of those. Almost all of us have at least one of those. And so even though the word consumer was a weird one before I started working in the space, it's really, and I really liked what Senator Warren said, it's about American families. And I feel like what all of you just said is that it's working with, this is a regulator for a consumer protection agency, is really an agency for regular families and making sure that they're treated fairly. So on that note, we're in 2021, so let's move forward. And one question I have for all of you as we think about what the CFPB should focus on next is what's keeping you up at night? What are the and I'm sure there's so many things, but with consumer, as I said, consumers are regular people, and regular people have a lot going on right now. So, as people who are working on these issues, what are the most pressing consumer protection concerns, either for you or for your constituents or your clients? The groups you work with, the groups you do this work for. And Senator Collins, I'll start with you this time.
Of course, and it's been mentioned before, of course, student loan debt. We know that student loan debt is higher than credit card debt now. I'm concerned about that for many of my constituents, but also the foreclosure with the rental assistance ending shortly, the moratorium. I know we're going to be confronted with homelessness in many areas across the country. That's what I'm concerned with, working on the state level with the governor to ensure that there's some kind of assistance there, a skill set or toolkit to sort of mitigate some of the harm that's going to be caused by the homelessness and the moratorium succeeding. I'm just going to throw something out that has always been a concern. I haven't been able to navigate this, and maybe this is where CFPB can help me. I've been thinking about the power that these credit rating bureaus have that's really influencing insurance rates, for car insurance rates. In Illinois, they don't look at so much your driving record, but they look at your credit score. And many residents in my community, Black and Brown community, have excellent driving records. But when you look at their credit score, it impacts the car insurance. That's something I really would want maybe some help in navigating or guidance on how we can deal with that. So when you ask these insurance companies, how do they base their rates? They said it's a very complicated algorithm that they can't share because of the competitive nature of the insurance companies. So maybe there's a possibility that we could look to having a public credit rating entity to take away some of this power from these private credit rating agencies like TransUnion, Equifax. So I would love to see a public service or public credit rating service that does not penalize, I think disproportionately penalize poor communities.
Thank you. Yeah, credit reporting is definitely a major concern. And we've definitely seen the ramifications. I think I've often heard that it's really a report of how much wealth you have rather than how responsible you are or anything like that. And I think that's thank you for mentioning that. I think that's a major concern. Marceline, how about you in Maryland?
Sure. So yes, everything, but I'd say from our work in Maryland, a couple of things we're very concerned about are tenant protections and tenant evictions. We run a tenant hotline where we assist people, and just to give you a sense, in 2019, we helped about 300 people. In 2020 and 2021, we had 1,400 clients who we served with no increase in staff. So needless to say, we have amazing staff working very hard, but we're very concerned with the end of the moratorium and the housing insecurity we anticipate. But another area that we're very concerned about, and we worked on in the General Assembly, was medical debt. So in Maryland, we did research, and we have nonprofit hospitals, and we found that over a 9-year period, they sued 145,000 patients to collect on medical debt. And these are nonprofit hospitals. So you saw people have their wages garnished. You saw people have liens on their homes, their bank accounts wiped out because they went to a hospital for care. And our concern is, in a COVID-19 or post-COVID-19 landscape, we know that not only are there people who lost employment and lost employment-based insurance, but also that the pandemic affected Black and brown workers in Maryland differently. They lost jobs more, and they were more on the front lines of essential work, and also had higher mortality issues. So we feel like with the long COVID and these people who are surviving, but with chronic health, medical debt is going to be an ongoing critical issue. And we believe it's an area where the CFPB could really act and look at the debt collection activities that are taking place right now and put in stronger rulemaking and supervision enforcement.
Thank you. Kat, what about in the student lending space? You mentioned the crazy amount of debt, but what in that space specifically?
I was going to say, I'm definitely going to sound like a broken record on student debt today. It's going to be student debt, but really one thing is just even broadly as we are even talking about student debt, just really showing how broad this issue is. And like we've heard several times today that it's the second largest class of consumer credit. So really just showing how many people this affects and really broadening the narrative of who's affected by student debt. So, we know that this is the lived experiences of older adults with debt, or consumers who've been defrauded by for-profit institutions, or many people who, who started school, weren't able to complete their education, but are still left with loads of debt. They're still expected to repay their loans, but may not have, the job or the credential that they expected to be able to repay that debt. And so really thinking about, how broadly this crisis affects people in every country, every corner of the country. And, the idea that we have a debt finance higher education system that just punishes, borrowers who are trying to pursue the American dream. And so, thinking about, what does this mean for furthering racial disparities in student loan debt being a key barrier to racial equity. And so I'd love to dig in a little bit later, talking about the Bureau's role in looking into student loan servicing and making sure that servicers aren't doing things that are contributing to student loan borrowers' debt, or looking at, are there servicing disparities, or are certain borrowers in certain communities getting having different servicing outcomes, as some data seems to suggest, or even thinking about the way that, consumers' education history is being used to underwrite their credit, or, looking at the ways that ISA providers are claiming that they're not credit and, are trying to flout, to, bypass regulations. So really thinking about the Bureau taking really key steps and looking at this market in the way that, there are 45 million student loan borrowers, and then there are so many ways that this market is growing, and we're seeing, emerging risk in other markets like ISA. So would just love the Bureau to take a more of a step there.
Thanks, Kat. Colonel Kantwill, how are our service members and veterans doing right now? What is keeping you up at night?
Well, I'll join the band here, and I'll say that student loans and education-related issues really do keep me up at night. And I know that Kat and her team are doing a great job out there, but one of the reasons that our great young Americans serve the military is to get those great educational benefits from the post 9/11 GI Bill, et cetera. And we absolutely must get the Public Service Loan Forgiveness Program back up and running properly again. We need to get for-profit colleges under control because unfortunately that's a real problem for a lot of military students. Income-driven repayment, those can all be great programs, but they really need to be energized. And I know the Bureau can play a really, really essential role in that as well. I really hope going forward as well that we see the payday rule, maybe even a better, stronger payday rule re-emerge. And I hope that the Bureau will lead vigorously, and I think that they will, on regulating strongly the fintech and online areas. I am very, very concerned about those. I feel somewhat like there's a, we're back in the wild, wild west when we start talking about online lending and some of these fintech issues and products. And I think it would be good to have the new strong sheriff in town. So those are a couple of things that would benefit the military community greatly.
Thank you. Yeah, I keep telling people just because it's on an app doesn't mean it's truly new. And it should still probably be regulated just because it's shiny and new. And I think that's something we see actually across all the issues is the fancification of the problems, if you will. Lorraine, there's been a lot of developments like with housing and especially in the mortgage space. But what are you most worried about? What are you seeing?
So one, I think in terms of where the Bureau falls into all of this is things like the 2021 mortgage servicing rule that's going to create a stopgap of sorts, post-moratorium, post-forbearance for a lot of homeowners and give them the opportunity to take advantage of the homeowner assistance funds that are coming into all of the states that are going to take time to actually land on the ground. So having that additional protection is important, and continuing to enact things like that because of all of the agencies. I think the CFPB is the most nimble in terms of, working faster. Linda and I for years have done a lot of work with all of the agencies. We work closely with HUD, with FHFA, with Fannie and Freddie, with Treasury, and the CFPB can be the youngest in charge, in terms of mortgage servicing because it was created in a way to be nimble and agile and be able to react quickly to things that are developing, whereas some of our older and more traditional housing finance agencies, they just have a very particular way of doing things. And being an ex-public servant, it's just the way it is sometimes. So being able to capitalize on the fact that the agency has more of a younger feel to it, the ability to move quickly or the desire to move quickly is important. And continuing to look at the complaint information that's coming in as the moratoria end, as post-forbearance land for a lot of homeowners is happening, and remembering that the large majority of the mortgage market is federally insured, so there is a lot that can be avoided in terms of people losing their homes by pulling the right levers. And I think the CFPB is in the perfect position to, know what those levers are and get together with its sister agencies to make sure that that homeowners have the ability to, and the time to, and the notice to take advantage of all of the different programs that are going to be available post forbearance, post moratorium. And as the homeowner assistance funds make it to each of the states, in Connecticut anyway, they will more than likely be grants. So it's help that's going to be very needed. And I do think that the Bureau is, no pressure, but perfectly positioned to keep an eye on all that's going on.
I think they can handle a little bit of pressure, good pressure, right? One thing that I personally have been really encouraged by, and I mean, several of you have already mentioned this, is the racial wealth gap and the disproportionate impact on communities of color. And one thing we've noticed in the past few months with the acting director is that the CFPB has made some statements that really do put a strong emphasis on addressing issues of economic justice and the racial wealth gap and how they go hand in hand. And you know, I know all of you are concerned about these issues as well. Are there specific things that you come to mind as either issues, agenda issues themselves, or the approach that the CFPB should take to really start addressing the racial wealth gap specifically? Are there things that come to mind? Senator Collins?
This will be pretty short because when you look at the racial wealth gap, primarily it's dealing with home equity. Many in the Black community have been denied home ownership based on the policies that were enumerated by Senator Warren, whether it goes to the ability to get a loan, what rate you're paying. So home equity is the key for many communities that have been unable to pass on this wealth generationally to their loved ones. And that's where we find, I think, the hindrance. Plus we had something called, I mean, it's been a history of predatory lending, whether it was what we had contract buying in Chicago earlier in the 40s and 50s, where individuals were not able to even have equity. It was on a contract. So if you miss one payment, the predatory lender was able to reclaim your home and sell it off for a much higher rate, just missing one payment. Not only contract buying, but over the years, government policies have put in place all the engines needed to deprive certain communities of wealth. And so it's not just with the banks, it's with even small Black businesses are not able to get loans to bring back some kind of economic development within their communities. So over the year, Chase, JP Morgan, Chase and Bank of America made these broad announcements about how are they going to try to remedy and put more money into for certain communities. But we have to make sure that they follow up, and it's a little bit too late. I mean, how over generations of neglect and not the ability to have any kind of financial footing. I'm not going to dismiss, we want the monies, but what they have proposed is too little, too late.
Go for it.
Sorry, yeah, and just to jump in there, I think just touching on something that Senator Collins said about the way that, you know, I guess the effects of discriminatory economic policy are continue to have effect on our current economic system, our current racial wealth gap. And so even when we think about that, we also have to think about the ways that that also contributes to the growing disparities we see in our student debt crisis, particularly when we look at borrowers of color, particularly when you look at borrowers coming from low wealth households are going to have to take on more debt. And so I think one thing is that just being encouraged that from the outset of his tenure, Director Uejio made clear that you know, consumers can once again look at the nation's top consumer watchdog and see that addressing racial inequality is a top priority. And one thing I just really, really want to emphasize is that the racial disparities that we see have and will only continue to worsen without oversight from the Bureau within the student loan market. Because I know we talk about, you know, racial disparities in a lot of other markets, but I think it's really important that we talk about the role of the Bureau, you know, looking into for-profit abuses, you know, the targeting of communities of color and veterans, even as Paul was saying earlier, and thinking about the ways that predatory targeting of certain communities drives the student debt crisis and leaves borrowers in more distress and heightens debt. We've seen, you know, private student loan companies targeting certain communities with high cost, high risk products like we've seen across other, you know, predatory lending markets, or even disproportionate collection practices in Black and Latino communities. And so I think it's really important that, you know, if we're talking about addressing racial equity, we really talk about, you know, how stark the student debt crisis is, particularly for you know, borrowers of color and most especially borrowers in Black and Latino communities who are carrying, you know, higher debt burdens and, are disproportionately targeted by predatory actors. And another thing I would also really want the Bureau to do, and something that's been said, I think, by others, is also the role in stemming discrimination in the fintech and emerging markets like income share agreements. I was really encouraged by the Bureau's recent RFI on bias in AI and machine learning, but really hoping that the Bureau takes a critical role in looking at, what consumers are saying about, how certain products are adversely protected class consumers. So when you're looking at where someone went to school to talk about underwriting, how is that going to disproportionately affect certain classes of consumers? When you're looking at income share agreements and you're looking at these providers saying that they're not credit, what does that mean for their liability under a COA? What does that mean for a whole host of other things? So really looking at the Bureau again, and I'm sorry it sounded like a broken record, but really using all the tools at their disposal to look at how broadly, student data, or even the use of certain education data, or even, emerging credit products that are not calling themselves credit, but are, again, in this market, are really harming consumers and disproportionately affecting, Black and Latino consumers. So I think that's a really critical point of talking about the Bureau's racial equity agenda.
I am a huge proponent of supervision and enforcement. And I think when we talk about racial justice and economic justice, we're talking about issues like access and fairness and opportunity. And for the Bureau to continue with its full supervisory roles and return to active enforcement, I think will be a huge step for all of us marching toward racial justice and economic justice, et cetera. And I really hope that the complaint portal remains open access and access to the public remains as it has been, because that is such a critical tool in exposing a lot of these terrible injustices that we're seeing. So I think supervision, enforcement, the complaint portal, all very, very important components of racial justice and economic justice.
I agree with what everyone said. I'm in Maryland, so I live in Baltimore, which was ground zero for redlining, and we still see the legacy of that redlining 100 years later in terms of access to credit, home equity, which communities are targeted for predatory for-profit colleges. In almost every case, it's shaped by the geography that was put in place 100 years ago for this redlining. At the same time, Prince George's County, which is the wealthiest majority Black county in the country, was still targeted for predatory products and loans in terms of the mortgage crisis last time, where people who had prime credit were getting subprime loans. So there's a lot of work to do. I think the research and looking at not just where there's predatory, deceptive tricks and traps, but to which communities, and digging into some granular data to look at implicit bias and disparate impact is critical. And I also think looking again at small businesses and entrepreneurs and looking at ensuring that we have HMDA-like data for the small businesses so we can see who's getting loans and who isn't in terms of growing our ecosystem of small business owners is also critically important. And then I agree, I think where the rubber hits the road is really on supervision and enforcement, and making sure that there are meaningful consequences for bad actors that are meaningful enough that there's a chilling effect, so they don't continue. It's not the cost of doing business. They actually stop doing that and treat consumers fairly and justly.
Lorraine, do you want to add anything?
Two things. One, continuing its work supporting language access and really encouraging or requiring language access from servicers that it regulates, and we've worked for a long time on this, and I think we're in a place where we can really make some progress. And then also, the majority of FHA borrowers are people of color, so we are really we're in a timely period post forbearance, post moratorium, COVID relief, making sure that whatever influence the Bureau has over its sister agency and HUD and FHA, that it's able to influence and at least even report back what it's receiving in terms of complaints from the ground, about there are mortgage servicers that service the majority of the loans they service are FHA insured loans. So there is ways to put more pressure on these servicers to make sure that they're doing the right thing. So far, my experience has been that servicers are looking to get as many people into workouts ahead of the big tidal wave of need that will be coming. So that's good. So making sure that we're all keeping an eye and reporting and being in touch, those of us that do the work with the CFPB, and for the Bureau to remain vigilant and I guess receptive to information of how borrowers, FHA borrowers especially, are being able to get back on their feet after COVID and the pandemic, because the majority of those borrowers are people of color, and that's where we lost a lot of our wealth last time around. So we have so much in terms of recent history in that many of us were doing this work when it happened and are still doing this work. So, beating our drum that we've been beating nonstop, and I'm happy that we never stopped. So we didn't lose any momentum. And I think in many ways we're more prepared this time around.
Thank you so much, everyone. And I think there's just so many issues you all have brought up, but I think I really sincerely think that consumers are very lucky to have all of you and our entire community. I know many in our audience are part of this big consumer protection community, and consumer issues really cover the gamut. And so I think as Lorraine just said, we're all just going to keep working on it, regardless of who's in power. The message is the same. And that it's that fair financial transactions, right, and equitable financial marketplace is really worth a thing that's worth continuing to fight for. So I'm going to ask our panel one last question, but before I do that, I wanted to make sure the audience knows we probably have time for maybe a couple audience questions. And for those, we encourage you to put them in the Q&A, the Zoom Q&A function. Please don't put them in the chat. I'm not that good at multitasking through the chats. So I will say, as the moderator, if you want a chance of getting your question to the panel, please put it in the Q&A section so it's easier for me to find. And if we, as we wrap up our program, I'm hoping we'll have time for a couple of yours after my last question, but I wanted to make sure people knew that who are listening in the audience today. But for our panel, I think our last question, so you all touched on so many issues, and the CFPB's jurisdiction and what they cover is also large. And while they do have a lot of staff that are dedicated, it's a lot of things to do. And the pandemic is in this weird time also where people keep thinking it's ending, but that there's these variants, and the economic, results of that is also complicated. And we all know that the second, even if we do think that there's an official end to the pandemic, it's not like the jobs are suddenly, and everyone's schooling and childcare and, everything is suddenly in place. So we're entering this time. At the same time, right, we have, the acting director is doing his best to keep turn the ship around and get things going in the meantime. And, hopefully any day now, our Director Chopra will in fact make it over to his new post. And so with all of that said, I think my last question for you is, in the next year, like, you've listed so many things that the CFPB should work on, and they should, but they have to start somewhere, right? They have to start somewhere. When Rohit Chopra takes the seat, he has to start getting his work done somewhere. So with that, what would be like the one or two things you think the Bureau should start with in the next 6 months to a year, let's say? And Marceline, why don't we start with you this time?
Great. I was thinking about it because I'm like, yes, everything. But I do think housing insecurity is foremost on my mind with the pandemic protections ending. So I think looking at foreclosure protections, looking at strengthening those, looking at supervision in terms of how how servicers are responding, and how what protections are in place for tenants is going to be important. And then the kind of secondary corollary piece I would say is looking at debt collection, because we know that people can fall behind, and unfortunately the debt collection systems have been quick to respond, although not always accurate. So again, looking really closely and carefully at what kinds of guardrails we can put around to make sure people do not experience predatory or onerous debt collection activities.
Senator Collins?
Just shortly, I just want to, well, just quickly, I want to pinpoint something that Marceline mentioned earlier. I think medical debt. Many people are, by no fault of their own, will be confronted with a huge amount of medical debt. And for hospitals to be nonprofit and to pray, that's another form of predatory activity. There should be something to help our citizens, our consumers, for medical debt. If you're not willing to serve how you got your charter or your mission, you need to come truthful and say you're for profit and not non-for-profit. So I think medical debt is something that really needs to be addressed.
Kat?
Again, if you can guess, I'm gonna say something about student loan servicing. But yeah, I just would really like the Bureau to see action of the Bureau taking steps on a student loan servicing rulemaking. I think what we've seen is with the current lack of safeguards, it really does allow companies to operate and impose massive costs on student loan borrowers at every stage, from origination all the way through repayment. And I think, Linda, you touched on something really important about, the pandemic's not over, but one thing is really scary. We don't really know what's going to happen with student loan payments right now. The payment pause is scheduled to end at the end of September. We hope that will be extended, but if not, we have to really think about what does it mean when you turn on the payments again for 40 plus million federal student loan borrowers. And then on top of that, you add that FIA just said that they're not renewing their contract with the Department of Ed. So there are a lot of different ways where you can just really see, we already see massive servicing failures all the time, but you really could see this, this perfect storm for borrowers that could be really scary. And so, the Bureau really does have a really critical role to kind of step in and make sure that there are really clear rules for student loan borrowers, and just making sure that, like Marceline said earlier, that these mistakes aren't just the cost of doing business, but really making sure that there's some sort of accountability for servicers. So I would just really say student loan servicing is something I'd like the Bureau to do.
Lorraine?
Like Paul mentioned earlier, supervision and enforcement post-COVID regarding the servicing rules and regarding especially the COVID, the 2021 mortgage servicing rules specifically related to COVID. I think the CFPB's eye on servicers is really important, and even mentioning, some of the supervision work in the bulletins is always like music to my ears. Because it means somebody's watching, and that's really important to how mortgage servicers decide to do their work. And over the years, as we've advocated and complained and pushed, they have gotten better at doing their job. So it is effective, and continuing to do that, especially when we've come off of a lull of enforcement, will be really important.
Thanks. And Colonel Kantwill?
Two things for me. I think the time is right for a federal rate cap. I think, as Senator Collins and the great folks in Illinois have proven, it can be done. If it can be done in Illinois, it can be done at the national level, I think. And I think that would be a wonderful opportunity to protect all consumers, particularly veterans, Gold Star and Blue Star families, and our most vulnerable consumers. So I think that's incredibly, incredibly important. I'm a bit biased, but there's something out there called the Veterans and Consumers Fair Credit Act. We may have a shot at it, so let's go for it. I'd like to see that. Secondly, public service loan forgiveness. In these trying economic times, when folks need to work and when folks want to work, public service loan forgiveness may give folks a great opportunity to earn, work, and serve, and get something in reward for it as well. So those are at the top of my wish list for the coming year and beyond.
I have to say, one thing about working on consumer issues is there's so many things that I personally want, like public service loan forgiveness. I'm waiting for my own application to be approved as we speak.
I'm so glad that someone's rally cry, because I can only have so many.
I was like, according to my count, I won 20 payments. I don't know if they agree with me. That's the thing that remains to be seen. And I think of just like how many, like so many people own, own homes, have student loans, have auto loans, all of that. And so I do feel fortunate that we're working on issues that matter. And like, I think we've done a better job as a community in the years, and the CFPB has really helped make this more relatable for folks. Because I think when you think financial markets or things that can seem overwhelming and something technical, but it actually involves all of our lives and all the lives of people we care about personally and professionally. And so I think this panel is a really good reminder of why the CFPB is important, as Senator Warren said, for American families, and why its continuing existence and work is a win for American families. So thank you so much for being here. I'm trying to see if there's any questions. I don't see any. I think we're going to sort out the next transition, but I want to thank you so much to our panelists. It is really fun for me to get to talk to you. I get to ask questions that I would ask you anyways, but in front of hundreds of people instead. And so thank you so much for being a part of this event and celebrating the CFPB's birthday with us, and cheers to the next 10 years. Both where you are, with the specific groups you work with, the specific places you are in, as well as the whole country under the CFPB's new leadership. I hope that I think we've learned a lot from the last crisis when the CFPB didn't exist to now, as the country faces its current crazy times in this global pandemic. I think it's really a testament to all of our work collectively, and the work of the Bureau and the people who set it up, continuing from their current perches wherever they are, alumni and otherwise. So thank you so much, and happy birthday to the CFPB. And thank you to our panelists for being here with us today. And then on my end, I believe I'm supposed to transition us to this open mic time. I'm waiting to make sure that is get some folks here. So I will ask to have our panelists return to audience mode, and our open mic folks from AFR help me in the background here. Thank you so much again for our panelists. And the open mic time is actually for, we want to give people in the audience a chance to share your thoughts about the CFPB. A lot of you in our audience, I know, have done this work with us for years, been a part of this overall, this broader consumer advocacy community for the last, whether you've been here for a year, a few months, or you've been here for many, many years. The CFPB, we want to hear from you how the CFPB's influence and existence has contributed to your work, where you think the CFPB should go. If you have any thoughts after hearing the panel that you want to share about where the Bureau should focus on. So we welcome those thoughts, and and we open up the floor to you as we wait for Chair Waters. Okay, and it looks like we have some hands raised. So I'm going to turn it over first to Rob Rondava from Leadership Conference.
Well, thanks, Linda. Can you hear me okay?
Yep, we can hear you.
Great. Well, so yeah, really quickly, I just want to thank you for this event, and more importantly, I want to just thank the CFPB for the work that it's done over the past decade, and for all the huffing and puffing that we've heard from opponents over the years of the Bureau. This is an agency that's clearly here to stay. And the reason for that is because the single-minded, the singular focus that it brings, and the way that it goes about engaging all sides and on all these issues that have to do with financial protections, including ours, but including the industry that's regulating. I think it does a really good job of really getting the full picture and figuring out, okay, what is in the best interests of the consumer. And despite some disagreements over from one leadership to another, I think that basic mission has been the same, and that basic approach has been the same. So keep up the good work, and I'm looking forward to obviously the next decade's going to bring new issues to come, but I think I'm really excited about the work that's going to be done. Looking forward to being part of it.
Thanks so much, Rob. Next, we're going to hear from Bev Brown.
Happy birthday to the Consumer Financial Protection Bureau. I second what has been said about the responsiveness and the effectiveness of the Bureau. And we look forward to getting back to having the Bureau have a new director and getting back to its original mission. I want to just echo something that Senator Warren said, and I also want to commend her. I think we really have to want to commend her for the vision that she had and the structure that she set up, because it is that structure that has led to the core responsiveness and effectiveness of the Bureau. At Citizen Action, we do not only advocacy and organizing, but we also do direct services. And I can tell you that our direct services department is pretty tough. They haven't always, let's just say, in terms of their confidence in a federal agency, their fondness for the Consumer Financial Protection Bureau is uncharacteristic. And I say that because Senator Warren said, you know, the database was so, what she thought was kind of the greatest or the most significant accomplishment of the Bureau. And I think she's right in that it leads to all of the other important things about the Bureau. Our direct services staff was initially extremely happy about the mortgage servicing rules that came out when the Bureau first opened its doors, but since then has consistently been hugely supportive of the Bureau and appreciative of the process for its rulemaking, the responsiveness to their clients' needs, and then to see the Bureau go from its data collection, its research, its investigations, to relevant rulemaking, and then on to enforcement actions when necessary. I also just want to say that I think that the Bureau created a culture of advocates within its staff that have gone outside the Bureau now, those who left in the last few years, to carry out that work with us at the state level in some significant ways. And I think we are now even closer to the Bureau in a way because of that really brilliant work that the staff, even staff who've left the Bureau, have done in making sure that we were carrying out some of the important consumer work that needed to be done at the state level. And I'm really looking forward to the next 10 years of partnering with the Bureau at the state, from the state level and the federal level, so that we have continuity of policies all the way through. And again, just hoping that we really get back to restoring the Bureau's mission quickly. I think I agree with all the comments about what issues have to be addressed, but based on the way the Bureau was set up and worked at first, I'm confident that once we have a strong director and we restore the original mission of the Bureau, we're going to be able to get to all those issues: student debt, medical debt, the housing protections, because that's what the Bureau really started out doing. And so we're excited about this birthday, this milestone, and we're very excited about getting back to solid consumer work from the ground up, and in partnership at the state level with the Bureau at the federal level. So thank you, congratulations, CFPB. Thanks for those who were there in the trenches in the last really difficult years. And thanks to all those Bureau people who were out at the state level carrying on the work. And thank you, Senator Elizabeth Warren.
Thanks, Bev. And for those of you who are in the audience, we hope you're able to join both to hear these great stories, but also for Chairwoman Waters' remarks, and she is on her way. So please do stick with us if you're able. We'd love to, and thank you for being here this afternoon. And as you can see from the slideshow, the quotes are all from people who've been helped by the Bureau, the very American families Senator Warren referenced. These are those individual stories. And with that, our next speaker is Ted Merman.
Thank you very much, Linda. Calling from California, from the UC Berkeley Center for Consumer Law and Economic Justice. And I want to echo something. This is the portion of the program called Favorite CFPB Memories. The panel, I think, really underscored something that's very unusual in a public agency of any kind, a federal agency in particular, and that is the dedication to public outreach and involvement. It's truly a public agency. It begins with the complaint database, as I think you and the panel underscored. It includes the special offices for veterans and service members, for older Americans, for students. It includes the advisory boards, not only the Consumer Advisory Board, but various industry boards, the special input from legal service providers. the integration of academics into the work of a federal agency. And that all brings me to my favorite memory. Very early on in the existence of the Bureau, there was a contest, I think, among Bureau staff for a new idea, new initiative, what would work, what's something we're not doing yet that we could be doing. And the winner was to bring together law school consumer clinics and have them offer their views, have the students in those clinics offer what's happening to their clients. To call this unusual would be to understate things significantly. Director Cordray assembled the heads of divisions once, I think it was once a semester or so, maybe once a quarter. And everyone would be sitting around the table. So when people talk about having a seat at the table, it was literally so. And then it would go around to the various law school consumer clinics around the country. First of all, this brought together those clinics in ways that they'd never been brought together, which is terrific. And there's now a conference, an biannual conference where they get together. But secondly, this gave law students the opportunity to talk not only to the heads of divisions, but to the director of the Bureau himself. And he took it very seriously. You can imagine the impact that this had on the students themselves. I will tell you, sitting in the back of the East Bay Community Law Center in Berkeley, you could see it on the faces of the students. This was going to be quite a story that they could tell their families, that were representing their clients, not just in court, not just in various legal proceedings, but also in bringing this to the highest levels of the American government. That was not only an amazing experience for those students, but it was also a real tribute to democracy. And so I not only am wearing my CFPB pin, but I also today have my CFPB green and white noisemaker to say happy birthday, CFPB.
Thanks, Ted. And I will say, I am happy that law students got that opportunity. I think if I had that opportunity in law school, that would have been awesome. So thank you for sharing that with us. We have Jamie Sauer next. And also I wanted to say, if those of you who are in the audience and want to say something and are wondering how, all you need to do is press your raise hand button. I believe you press on participants, it will give you on the bottom of your screen, it will give you the option to raise your hand. So we welcome more of you to share if you are feeling inspired by this conversation and just didn't know how to. But Jamie, we'll go to you next.
Hello. This is actually Ann Bedour with Texas Appleseed. I'm sorry, because of the way this Zoom call worked, I couldn't change the name that appeared with me. So my wonderful colleague Jamie's name is up there, but this is Ann speaking. And I just want to echo what Ted said about how the CFPB has engaged communities. And I was really touched by Senator Collins' statement about giving consumers a seat at the table, because so often before the CFPB, financial policies were made in the back rooms with profitability as opposed to profitability of businesses overshadowing the profitability of our families and the well-being of our families. But one experience that I really remember was a team from the CFPB coming to Texas, and they did this many times during the years that Director Cordray was at the helm. And they came to a church in Houston, and advocates and individuals from across Texas had made the effort to come to this church to talk about the need for payday lending reform. And it was, I think, one of the more powerful and moving experiences that I've had, to see so many people come together and to sit there with people in the room who had the power to do something about it, that had the power to actually change policy. I think it was an inspirational moment for a lot of people. They heard from direct service providers, they heard from impacted individuals and borrowers came to talk about the harms of these products. They heard from faith leaders and other community leaders, political leaders, business leaders. It was an incredible, diverse set of voices coming together. And to me, it really reminded me of the power and how a lot of these issues, though in the political spheres, we may feel like it's an uphill battle to gain traction, to make progress, that at the community level, many of these issues that we fight for are a no-brainer. Many people come together and agree, and to have an agency with the power of the CFPB going into the community and hearing those voices and having those voices have real and tangible impact on policy is something that has always stuck with me. And I know these are long efforts, long-term efforts to find solutions to move policy forward, but it's incredible to have the CFPB there. And I hope that we have 10 amazing years ahead where the interests of communities and of those diverse voices are really at the forefront and raised as we look at policies that build our communities.
Thank you so much, Anne. And then I believe we have Rob next, Rob Magara.
Hi, this is Rob McGarrett. I worked at the AFL-CIO Office of Investment, helping, frankly, Senator Warren and everybody get this, and Lisa worked to get this AFR and get the CFPB going. And now I took the buyout and I'm working at Maryland Legal Aid, and I can see the value every single day with our clients, from elder financial abuse to evictions to consumer debt collection. I worked with Marceline here, and it's just terrific that CFPB is getting this tremendous 10th birthday. And frankly, we've got many, many, many more years of success ahead of us. We've got many more battles, as we know, but it's been wonderful to have this celebration and wonderful to see all the great people working on this effort. And keep up the good work, everybody.
Thank you so much. I feel like your past and current really tie in where the Bureau is really important. So thank you so much for sharing that with us. Thank you so much to all of our speakers for sharing your reflections on the CFPB. We really appreciate it, and we especially appreciate your continued partnership as we all work together on these issues. And I am just waiting for. It looks like I'm just confirming with my team here that we're ready for the next part. All right, so I am going to turn the mic over to Rich Dubois, Executive Director of the National Consumer Law Center, to introduce our last speaker for today.
Thank you so much, Linda. It is my pleasure to introduce our closing keynote speaker, considered by many to be one of the most powerful women in American politics today, Congresswoman Maxine Waters, Chair of the House Financial Services Committee. She represents the 43rd Congressional District in California, which includes the Los Angeles area. We are so fortunate to have Congresswoman Waters with us here today. She is a fearless and outspoken advocate for women, children, people of color, and the poor, among others. Chair Waters has been a champion of economic justice and building a truly fair and equitable financial system that serves all people and holds corporations accountable when they take advantage of individual consumers and communities. Chair Waters has been a champion of consumer rights for a very long time. She was a strong supporter of the Dodd-Frank Act, and she has been a leading proponent and defender of the Consumer Financial Protection Bureau. When she became ranking member of the House Financial Services Committee, she became the leading defender of the CFPB in the face of constant attacks and attempts to dismantle the Bureau during the Trump administration. Chair Waters, we are grateful for everything you did to defend the Bureau during those difficult days. At the National Consumer Law Center, we advocate for the rights of low-income consumers. Our low-income clients across the country are very fortunate to have someone like Congresswoman Waters, someone who prioritizes economic justice, as chair of such a powerful and important committee. Indeed, we are all fortunate to have someone in this position who puts the needs of our most vulnerable people first. I am honored to introduce today's keynote speaker, Congresswoman Maxine Waters.
Good afternoon. Thank you, Mr. Dubois, for that very kind introduction. I'd like to begin by thanking all of today's many hosts for inviting me to deliver remarks today, as well as all of you advocates for your hardworking protecting consumers from financial abuse. I'd also like to thank Americans, certainly, for financial reform. And AFR's Executive Director, Lisa Donner. AFR was established after the passage of the historic Dodd-Frank Act. AFR has been living up to its mission of advocating for and defending the critical financial reforms Congress has passed ever since. AFR has also provided a countless number of experts on a range of topics, including on financial stability, investor protection, and of course, consumer protection. And so I can't tell you how delighted I am to be here with you today, closing out your celebration of the 10th anniversary of the Consumer Financial Protection Bureau. As you might all know, I was an early champion of the CFPB, and I continue to be one of its fierce supporters. As a senior financial services committee member in the years leading up to the CFPB's creation, I witnessed the weak response our banking regulators had to the viewing subprime meltdown, which was driven by no-doc loans, mortgage fraud, and predatory lending predominantly targeted communities of color. I knew that something needed to be done to protect consumers from these practices because our regulators weren't doing anything. Subprime lenders saturated the market, the mortgage market. And of course, we saw what happened when, of course, it just all fell apart. And the bank regulators failed to recognize that abusing consumers would stabilize our financial system. In the aftermath of the 2008 crisis, we needed more than a Band-Aid or a quick fix to resolve these systemic issues. We needed a watchdog and an advocate who was solely focused on protecting consumers. In the past 10 years, the CFPB has done a tremendous job in putting consumers first. And so the CFPB was actually the centerpiece of Dodd-Frank reforms. And as I said in the beginning, we didn't have any protection for our consumers. Our consumers were supposed to be protected, but they really did not. And that's what the CFPB certainly has attempted to do. But the Trump administration did their utmost to undermine the CFPB, starving it of its resources, sabotaging its structure, limiting the scope of its authority, and rolling back on regulations on everything from payday loans and payday lenders to transparency requirements. Despite these efforts, the CFPB is still here and stronger than ever before. Nevertheless, there are three important issues on which we must remain vigilant for the next 10 years if the CFPB is to thrive. First, I expect my Republican colleagues will continue to attempt to water down or eliminate the CFPB's powers. We must be prepared to keep defending it on the ground and in the courts. Second, we must continue to focus on racial equity and economic justice to finally end lending discrimination and at last close the economic divide. The Dodd-Frank Act directed the Bureau to adopt regulations governing the collection of small business lending data. The CFPB is finally making progress, and it is critical that they finalize this rule as quickly as it will shine a light on who is getting small business loans and on what terms. This data is similar to the kind of mortgage data we have that has helped us monitor redlining trends, and it will be helpful to combat discriminatory lending against women-owned and minority-owned businesses. Third, the CFPB needs strong leadership. I hope the Senate will confirm Rohit Chopra as CFPB director as soon as possible. With new leadership at the CFPB, now is the time to reimagine all that the CFPB can do, from strengthening its leadership and enforcement powers to increasing its resources so that it can function as it always has and was intended. The CFPB has and can continue to do a lot of good, but Congress must also work to strengthen our consumer financial protection laws in a number of areas. Some of those areas include fixing a biased and broken credit reporting system, strengthening protections against abusive debt collection practices, addressing the student loan debt crisis, and overhauling the unfair and predatory payday lending policies that are exploiting low-income communities and communities of color, including by imposing the interest rate cap. So once again, I want to thank you for allowing me to join this celebration with you and for all of your efforts to build a fair and just financial marketplace. Certainly, I look forward to continuing to work with you to ensure that the CFPB reaches its full potential. Ladies and gentlemen, this is our time to fix what Trump did during his tenure as the president of the United States. Those 4 years that Trump was president, he attempted to roll back, undermine, and destroy much of what we had done with a progressive agenda. And so now we're in this historic moment. We have a new administration. We have a president, President Biden, and Vice President Harris, who are committed to a progressive agenda. And they've always, since they've been in rather, talked about equity and fairness and what was going to be done to get rid of the kind of discriminatory practices that had been around for far too long. And so I'm excited about the possibilities of what we can do. I'm excited about the change that we can create. And of course, we could not do it without organizations such as yours. Without your advocacy, without your support, we would not be able to move a public policy agenda that we aspire to. So I thank you for the work that you do. I'm looking forward to the work that we have before us, but I'm energized by knowing that now we have a chance. Thank you so very much.
Thank you so much, Chair Waters. We share your excitement and your energy and your determination to move forward. We appreciate your remarks and your longstanding support of the CFPB. So thank you very much.
Yes, you're welcome.
Thank you. I know we join in your energy and enthusiasm to defend the Bureau and to extend consumer protections more broadly. So thank you very much. So that is the end of our program for today. I want to thank everyone for attending. I hope you've enjoyed the sessions, and I hope we all go forward and continue to fight for consumer rights and consumer justice. So thank you very much.
Thanks all.